Wyoming calling, right?
Wyoming
It's a three-day
calling.
event, 24 to 26. But today's the crucial one because that's when Jerome Powell will be speaking. And the time is scheduled at 7:30 p.m. India time, right? So we're going to be closely watching out for that. Before that, I thought it would be quite important to jog our memory to tell our viewers what happened at the last Jackson Hole Symposium. Well, at the same gathering last August, Powell famously warned the U.S. economy may enter a lengthy period of very restricted monetary policy that will bring some pain. Consequently, the S&P 500 fell 3% on the day of Powell's 2022 speech and crashed close to 13% a month after Jackson Hole. But historically, it's not that the Jackson Hole, shakes up the market in a very big way. It did the last time, and in the 1 month following the speech, it did fall, more than 10%. But on an average, there was some analysis done, and I picked this up from one of the, publications. The S&P has moved up an average of just 0.3% in the month following the symposium between 1978 to 2022. And this is, as I said, I picked it up from some publication which was quoting Dow Jones data. But this one is going to be very, very crucial, and investors are on the sidelines ahead of this event. Yesterday, as you saw, there was a big bout of profit-taking. Rajat Bhattacharya, senior investment strategist at Standard Chart, is now joining in. Rajat, quickly first, lay out your expectations. Do you expect a big shake-up this time? Or do you think Powell is going to say, well, it's going to be data dependent as usual? He's not going to give a clear signal. Are we done with rate hikes? And how will the market react?
Morning. Yes, and that was good background history, especially from last year. Now, Powell is in a tight spot. I say that because while he needs to keep rates high, you had data, let's say as late as this week from the PMI data, right, which is showing slowdown in US growth. That data was particularly weak in Europe, but it was also weak in US, especially that services PMI came down to 51, which suggests that growth and activity is slowing even during the summertime when we were expecting a lift up in consumption. So he's in a tight spot. He has this data coming through, which is weaker than expected. And yet we know that inflation remains high, well above the Fed's target. So he probably, if you were to pin me down to it, he would probably stick to that data-centric approach for now, not committing, but he will definitely sound that note about keeping rates higher for longer. And markets, as you know, have already factored that in. So it will be interesting to see whether he takes note of this latest PMI data in his speech tonight.
Okay. Rajat, hi. Good morning. So we'll watch out for it. I think the base case right now is that he'll say more of the same, right? Exactly what you said as well. That rates are going to stay higher for longer. Now, that's a scenario that the market already perhaps knows. So the question is, indeed, if that is what is delivered and there is no fresh hawkishness at Jackson Hole or fresh concerns raised by the Fed chair, then what's the trajectory ahead for both the bond markets as well as equities? And what have you made of the 16-year high bond yields that we're seeing in the US? Have the equity markets priced this in or not quite as much?
Yes, a lot goes on how the bond yields react, the dollar reacts, and then the equity markets, right? So the bond yields have pulled back from that 16-year highs you referred to over the last 1 week, just after this PMI data. So that data did have an impact on the pullback in yields. Now, to your point about how the markets could react, if Powell is not overtly hawkish more than what we have heard so far, he needs to stick to that line of higher for longer to ensure inflation comes down. But if he doesn't deliver an even more hawkish surprise, you could see bond yields settle here, a range trade, or pull back even a little bit further, and that helps the dollar to pull back further, and which helps the equity markets in the aftermath of that. But that also has implications for emerging markets, right? So the emerging markets need that dollar to pull back further, yields to pull back further. And I suspect that, if he's not overtly hawkish, maybe we will see yields stabilize a bit more and dollar to stabilize a bit more.
Okay, got that. Raja, thanks a lot for joining us. Is there anything else in the speech that you think could perhaps lend some kind of a positive surprise to the markets right now, or anything that you think is perhaps not factored in right now which would help the market move? All right, there seems to be some trouble with that connection. We're just going to try to repatch that line with Rajat. But, we were talking about, of course, the Jackson Hole Symposium, which is scheduled later today. All eyes really on Jerome Powell's speech. And we also do have Christine Lagarde, who's going to speak, after that. So that is also extremely critical for us to watch. And we will wait by for all of those comments. And, that is the key cue to watch for our own markets also right now. I think another question I wanted to ask him was on the banks as well, because whether it's in the US, whether it's in India, that has really been the pain point for the market. So.
Absolutely, because, yields have been moving higher even here.
Yeah.
And then there is this whole margin compression issue that clearly is not going away. Now there's a fresh debate, as Prashant and Sonia, they were discussing with a couple of rating analysts on whether there is any need to worry on the retail portfolios, especially unsecured loans, credit cards and all these personal loans. So that's a matter. But I think what Rajat was saying was quite interesting, that as long as he reiterates what we already know, which is higher for longer, will be data dependent, need to watch for inflation. If there's no additional fresh hawkishness from the US chair, then maybe the markets will have reason to heave a sigh of relief, the bond markets, because the bond markets have, the yields have rallied in anticipation of more tightening. Because inflation obviously has been a little sticky. But crude oil has, cooled off since then. So maybe if he's starting to acknowledge some of those points, then like Rajat says, that maybe we could be in for a bit of a relief pickup in bonds. The moment that bond yield retreats, the moment the dollar stabilizes, automatically good news for equities.
All right, I think Rajat is back with us as well. Rajat, we lost you for a moment, but you were mentioning about any kind of positive surprise that you think could come through if, like we mentioned, if there isn't any further sort of hawkishness that comes through in the policy. But I think it's also important to know that in the past couple of weeks, we have got a lot of data, which is very positive, which I guess that's where a part of the fear also stems from.
Yeah, I mean, the data has been quite, confusing at times. But I would again reiterate that the latest PMI data, which is the latest activity number that we get, is showing some softness. And on your point about, the other thing about Jackson Hole is I would watch ECB President Lagarde. She's in a tighter spot because inflation there is higher than in the US, and yet growth there seems to be now slowing significantly. In fact, PMI suggests that the services sector is contracting. So if the ECB President Lagarde is, acknowledges that slowdown, then we might get
Rajat unfortunately got you on a bit of a scratchy line, but thank you very much for joining in. We look forward to your comments once we have greater clarity from the Jackson Hole Symposium. Get into a break. On the other side, we'll put the spotlight on crude oil prices. Manisha will be joining in.